Hi, everyone. Thanks for joining us today. We're just going to wait 1 or 2 more minutes to get everybody settled and in the room. Just so everyone is aware, this meeting is being recorded today, so we appreciate you being here to participate, as well as allowing us to record it for those who aren't able to join us today to be able to watch back later. My name is Carrie Park, and I'm here today to welcome our guests from Withum Accounting Firm, certified public accountants that specialize in our industry, to be able to support our NEVA members today in navigating the waters of SVOG. Just a few housekeeping notes real quick. We are going to ask everyone to please stay on mute for the duration of the presentation. Our guests today are going to have a presentation where we anticipate a lot of your questions are going to be answered. And we will save time at the end for some Q&A for some specific questions. So please remain on mute until that point. Also, I would like to remind everyone that everyone in attendance here of their obligation to comply with the antitrust laws. Specifically, participants in this meeting must limit their discussions to those set forth on the agenda and may not share competitively sensitive information or reach any agreements limiting competition between or among them. Any violation of the antitrust or competition laws can have serious consequences for the individual, the company he or she or they represent, or for the association itself. If any participant believes that a discussion could be interpreted as sensitive from the perspective of the antitrust or competition law, he, she, or they should alert the meeting chairperson, and that discussion topic will end. NEVA has adopted an antitrust policy, and all participants in NEVA should familiarize themselves with that policy. Any questions as to the appropriateness of a particular topic, discussion, or action should be addressed either to NEVA counsel or to a participant's own counsel. Thank you so much again for being here. And at this point, I'd like to hand it over to our guests from Withum.
Thanks so much, Carrie, and good afternoon, everybody. Thank you for joining us today as we talk about the SVOG program. My name is Scott Bartoff. I'm a partner and a practice leader in Withum's Theater, Entertainment, and the Arts Group. I'd like to, before we get started, I'd like to introduce, pass it over to Alex and Lara from my team as well, to have them introduce themselves. Lara?
Hi everyone, my name is Lara Waldner. I'm a senior manager here at Withum in the theater, entertainment, and arts niche. So I work with commercial for-profit clients as well as a lot of not-for-profit clients. And I specialize in theater and entertainment, which I love a lot. So I'm glad to be here and helping out with SVOG, which I know has been a crazy process for everyone involved, but again, looking to get everyone reopened and providing the help that we can.
Hi, everyone. Yeah, my name is Alex Holderbaum. I am a manager in Withum's Theater, Entertainment, and the Arts Group. Similar to Lara, I work primarily on the audit and advisory side for commercial Broadway shows and not-for-profit theaters and venues. And again, just really excited to share our knowledge with you and hopefully answer some questions. As we know, this has been a tough and frustrating road, but at this time, I think we're heading in the right direction. So, Scott, I'll kick it back to you.
Thanks, Alex. So just kind of a brief layout of what we expect the presentation to look like today. We know a lot of you have submitted questions. We thank you for that. We've designed the presentation to answer most of those questions, but we also want to leave time at the end for you to go through any specific questions that may have been unanswered. So we're going to leave some time for questions at the end. We're going to begin with just a brief history of kind of where we are with the program from the inception of it through today. And then we're going to spend some time talking about receipt of the grant, right, and how you treat it, revenue recognition requirements. And then we'll go through some of the uses of funds under the grant, some of the audit requirements, and then again, circle back to a Q&A session. So we've been involved with this program since way back in the day when it was called Save Our Stages, basically this time last year, right, the summer of 2020, when we started kind of getting in conversations with the Broadway League and their government relations committee and certain members of Congress and their offices to kind of talk about, you know, what a program like this would look like or what it should look like for the industry. So we, watched the program, of course, undergo many changes until it was ultimately signed into law in December of 2020. And since that point, we've spent a lot of time, again, working with the league and working with the SBA themselves to address some of the significant issues that the initial, program was facing. And then, of course, to kind of shape the FAQ process, which forms most of the guidance that we have on the program today, right, in addition to the statutes. So, through that time, we participated in some SBA roundtable discussions. We helped through some roadblocks there, and of course, advised our clients, right, and tried to just really help the industry get their arms around this program, what it looked like, how to apply, and then, of course, most importantly, how to use the funds and account for them now that the funding is in. So, starting last April, right, when we watched the application program open and shut in the same day, only to reopen several weeks later, as most of you have been through that whole roller coaster. And then we fast forward to today, right? And, what we've done is kind of analyze all the information that's out there and attempted to come up with some sort of best practices and industry standards relating to the whole process, right? From receiving the grant, from recording it in your books, spending it, of course, accounting for it, and then ultimately being prepared for the audits that will be generally required under the grant. So with that whole process comes several disclaimers. As all of you know who have been through the program or the PPP program or the Employee Retention Credit program, the government can and does change the rules as we go. Sometimes this happens several times in the same day, as it did on April 8th, and other times it's weeks or months later. But what today's discussion is going to be is, of course, based on everything we have out there now, right? Everything that's kind of known and knowable at this point in time. And what we do is, as things change, whether it's from further guidance from the government or further insights that we glean through the process, we will send updated email blasts and certainly updates on our website at withum.com. So definitely stay tuned for that, because the program does continually have updates. So with that, I'm going to kick it over to Alex to talk about some of the revenue recognition principles. Alex?
Great, thanks, Scott. Yeah, so I guess just to kind of kick off, I wanted to first start kind of, we're past the application phase, and a lot of us have received our grant letters, and some of us even received our cash. So, when a lot of us received the grant letters, there were immediately questions about that grant letter and the information on that grant letter. So, the first thing was kind of looking at the project periods. And a lot of people noted, well, this project period doesn't seem to make sense, right? So kind of what happened is, and don't fret, there has been discussion about why this is and what happened, but what you need to remember is that the actual law states that the project period is from 3/1/20 through 12/31/20, caveat supplemental funding, which we'll touch on a little bit later. So even if your project period says, the beginning date is the date you received the letter, you need to remember that doesn't limit when you can use these funds. The SBA acknowledged that there was issues with the reporting. They even sent some letters blank to try and limit this confusion. But yeah, so it's just important that the project period, just remember, is from 3/1/20 through 12/31/21. Another thing that came up when looking at this was, you filled out these applications and you got the budget. The budget came on the grant letter, and you don't really know if that's actually how you're going to be able to spend the funds. Because at the time when the application was filled out, you filled it out based on the best of your knowledge. Originally, there was this idea that anything over 10% movement of a budget line would require approval from the SBA. Well, recently in the latest FAQs, they've actually removed that. So there is no longer a rule that if you have a 10% change in budget item, you need to get an update to you need to get approval from the SBA. At this point now, you'll spend the funds as long as you're spending them on allowable expenses. When you're done with the program and you've spent all the funds, you'll submit an updated budget. Finally, when a lot of people received their grant letter, they were getting notices on the portal about the SF 425 and that there were 15 days to submit documentation. A lot of people were having questions about this. And really what we've been recommending as far as this is that the actual law states that you have until 12/31, again, 12/31/21, assuming no supplemental to spend these funds. So clearly you couldn't have all of the information. You wouldn't know everything in 15 days. One thing we originally recommended was to, send an email back just stating that we are not going to have this because this is an advance, this grant is an advanced funds, and we have until 12/31 to spend it. So, a lot of people got their grant letters and they noticed these things. We did want to touch on those common questions. The next item that kind of happened was the cash was received. So a lot of people have questions of, okay, we've got all this cash. What are the requirements and what do we need to do with it? So the FAQ stated that the cash must be in an interest-bearing account. It did not state that it has to be in a separate account. But one thing that, a lot of organizations, a lot of companies are doing is keeping it in a separate account. So it's easier to kind of track the movement of when you reimburse yourself for these SVOG expenses, when you take SVOG funds and allow them to be used in operations. And I'll touch a little bit on that more in a second. The other thing that I think is important to note about the cash is that it does have to be in an interest-bearing account, but you need to remember that you can only keep interest up to $500. It does state that in the FAQs. So it's important that you are tracking the interest earned on SVOG separately from any other interest you may have. So after the grant letter, after you've received the cash, most would ask the question, well, what do I do as far as recognizing revenue? So SVOG is what we would consider a conditional grant. What that means is there is a condition to be able to record the revenue of the SVOG. And the condition is that you have eligible expenses up to the full amount of your grant. Any amount of that's over you have eligible expenses, you can't spend the funds, you'll have to return it. So at any point in time, you will record revenue up to the point in which you have eligible expenses. So the easiest kind of example for this is, let's just say you received your grant letter on 7/4/21 and you received $10 million in the bank. You'll have cash of $10 million. And at that time, because you haven't allocated any expenses, you have a $10 million liability, a $10 million liability as a grants payable. Now, as you remember, and as I stated, the project period goes back to 3/1/20, right? So technically, at the date you've received the grant, you could start recording revenue for all the expenses you've had going back to 3/1/20. So now that we've been having a lot of talk and a lot of recommendations with our clients on kind of, how do I do this? I've got the cash, I've got the liability recorded. How do I start recording the revenue? So one thing that we've been recommending, and we think is probably an easy way to do it, is starting to isolate periods of time going backwards first. So for example, maybe you start with, you take your P&L, you take your full GL detail from 3/1/20 through 12/31/20, you go in, you tag all the expenses as allowable expenses, you've got a bucket of expenses, and you remove that from the liability and you record your revenue. Now, what's important is, as you're recording revenue, you should also be reimbursing yourself on the cash side. And another important point on this is that you shouldn't be doing blanket transfers of the cash. Your transfers of cash should match the revenue record. So if you go back and from 3/1 to 12/31, you've had $100,001.01, don't transfer 100,000, transfer $100,001.01. And the main reason for this is that the SBA has said that all of the SVOG program needs to be fully traceable to your books and records, and you will need to have backup dollar for dollar, penny for penny backup for every expense that you have. So in this case, if you do a blanket transfer and the SBA comes in and says, show me the receipt, show me what support, show me what expenses make up this revenue and make up this transfer where you've reimbursed yourself. If it's not to specific expenses, they're going to question, well, they're going to start questioning things. And the point is, you want to make sure that, everything kind of matches from the revenue, you have the eligible expenses. So you take credit for the revenue, and once you take credit for the revenue, you reimburse yourself for the cash. Now, one thing that we get a lot of questions about as far as recognizing the revenue is then what do I do going forward? So now let's just say you've gone backwards and you've looked in the past and you've recorded the revenue you've recorded your revenue up to maybe the point of the day you received the cash. What do we do going forward? Do I need to reimburse myself, transfer the cash every time I have an expense, or every week or every month? There is no guidance as far as how often you're supposed to transfer and reimburse your cash. So what we've kind of recommended as kind of the easiest reporting way is kind of do it in batches. Do it in clean cutoffs. So whether it's a cutoff of every week, cutoff of every month, that way you can collect all the support you need, and you have the backup ready that relates to the revenue you're recording. Another really important part, I think, of all of this, and it's going to, when Scott's going to go talk next about kind of the allowable expenses, is talking about SVOG and the revenue and the expenses and how this relates to all of these other programs that we've had. We've had PPP, we've had ERT, employment retention tax credits. Some people received business interruption insurance, in which it was the reimbursement of expenses. And a lot of not-for-profits get other reimbursement grants. So one thing that we do want to stress is the importance that there is no double dipping. And what we mean by double dipping is $1 of expense cannot be reimbursed by more than one of these funding sources. So it kind of is part of the reason why we stress the importance of tagging and having these schedules and having clean books when you record your revenue, so that you're able to kind of create a schedule. And we've been recommending clients create a schedule with all of your expenses, and then have a row for each one of the programs and kind of work your way down to be able to prove, okay, I didn't use any salaries that were used for PPP. I didn't use them for PPP2. I didn't use them for employee retention credits. I didn't use them for SVOG. So it's really important that you're already, kind of already thinking about these schedules and thinking about how you're recording and how you're documenting the expenses that you use amongst the different programs. And that's really kind of, the main source of the revenue. The key thing to remember is that it remains as a liability until you have eligible expenses. And then as you have eligible expenses, you can record the liability equal to the exact amount of expenses you've incurred through that date. And as you're recognizing the revenue, you're able to then at that time reimburse yourself into the cash, the SVOG cash, into your operations, and you can use that cash for whatever you need to use it for, whatever the business needs to use it for. Now I'm going to kick it over to Scott, and he's going to talk through some of the, I think kind of the most important area is allowable and unallowable expenses.
Thanks a lot, Alex. So we'll kick off this section on eligible expenses with the concept of payroll. And as anyone who has been through the PPP program would know, that we could probably do a seminar just on the definition of payroll. Quite literally, it's several pages long because the SVOG program references the definition that was used for PPP. So there was so much work that went into that, they just kind of leveraged it and said, see the PPP guidelines for the definition of payroll. So that being said, this concept of not being able to pay an individual person in excess of $100,000 a year comes back in SVOG. And since SVOG is not a year, right, it's a 22-month period if you use March 1st to December 31st of 21, and it could be a 20 8-month period if you get a supplemental grant. So we kind of boil this 100,000 a year down to the weekly rate, right? So that 100,000 divided by 52, right, is $1,923. So you'll hear us reference that a lot, and that's kind of the basis that we should be looking at when calculating payroll, eligible payroll to be reimbursed under the program. It's limited to $1,923 a week per employee. So a couple things we're going to mention here. One very important thing is that, like PPP, health benefits and retirement benefits are not subject to that cap, right? So the $1,923 a week is a compensation cap. It's not, it does not cap health benefits and retirement. So that should be looked at separately. And when we look at, so, the question comes up, how much can we pay an employee under this program? And again, it's going to depend on whether you get a supplemental grant. But if you were to have incurred expenses for an employee for the entire period, right, of March 1st of 20 through December 31st of 21, you could pay somebody $1,923 a week for that whole period, right, which would be $183,333. Now, important to note, right, those people have to actually be working and providing services for you, right, in order to pay them under this program. So, people that were, for example, on unemployment, right, we can't be going back and paying those people. And again, people, let's say they were laid off or weren't working for a certain period of time, you would skip that period. But if the person was working that entire time, and let's say they made a salary in excess of 100,000, you can reimburse yourself, right, from March 1st of 20 through the current day, and then continue paying them going forward. So that's how you would get to that $183,000 cap for one person. Again, supplemental would extend that out further. As Alex mentioned, you can't double up, right? So that's where we really recommend people kind of, when you're going through this analysis, and it is a detailed one, lay out, all your employees, right, the amount of compensation that they earned over the grant period, and then kind of start backing out, right, any other reimbursements you got under other programs. So for example, if you paid somebody and over that time period, let's say you paid somebody $125,000. Well, if you know that you got an employee retention credit for that person, right, you would back out the wages that went towards the employee retention credit. If you further got insurance reimbursement, that was a direct reimbursement for that payroll expense, you would back out that portion. And then you would ultimately get to the $100,000 limitation, right? So whatever, let's say you after you backed out those items, you were at 110,000. You'd say, okay, I know I have to limit the salary over a 12-month period to 100,000. And then you would want to look at what you pay those people, if at all, during PPP1 and PPP2. So obviously, it's a hard thing to just talk about in the abstract, right? You really have to just set up an Excel sheet and go through it, go through the details. And we're happy to to advise or help out with that. But that's something that each company will have to do themselves ultimately, right? As far as how much money you can apply for payroll during the grant period. Other things that come with the payroll conversation, we talked about the period March 1st through December 31st. Two ways to kind of go backwards, right? The only two ways to go backwards are if you're reimbursing your company for funds that you already expended during that period. And the second way would be if you're restoring an employee's temporary wage reductions, right? So the SVOG put in this concept where if somebody was making $1,800 a week and you reduce them to $1,000 a week, if they continued working at that reduced rate, you can make up that differential, right? That $800 difference you could make up with SVOG. So those are the two ways to go backwards. And then as far as going forwards, of course, you can hire and pay whoever you like, right? So if you hire somebody tomorrow and you pay them through the rest of the year, you can, of course, use SVOG funds for that. We just bring this up because what you can't do is say, I'm going to hire someone tomorrow and I'm going to pay them for, the last 2 months. I mean, sometimes that sounds obvious, right? But as people try to go through all the different, iterations of how to spend the money, these questions come up. So new employees can only be paid prospectively, but prior employees that work the whole time can be paid retroactively in those instances. We just point out we've been advised by employment law counsel, and of course seek your own counsel here, but if you are making up pay reductions going backwards, it's not a good idea to call that back pay, right? So you don't want to put on the pay stub that we're paying you for back pay from June of 2020. Rather, you just want to make up that differential. So if you're going to be paying somebody $4,000 to make up a pay reduction from June of 2020, just cut them a check today for $4,000. It's within the SVOG program guidelines that you're making up for that time period, but it's not a good idea to put back pay on a pay stub. So I think we beat up payroll pretty well. I'm sure there's still maybe some questions there, which we can address again at the end. But that's the basics. Owner compensation is one more thing we'll mention. So as you may have seen, the FAQs say that owner compensation is limited to what the owner received in compensation from the entity in 2019. That's all it says. So it leaves kind of a lot for interpretation. If you take it to the extreme, you say, well, what if the owner got $5 million in 2019? Can we pay them $5 million here? Some people have suggested, based on that FAQ, yes, you can, because it says you just have to limit it to 19. What we advise is we don't believe that's the underlying intention. So we just advise, of course, use up the expenses that you are otherwise entitled to first, before you consider paying owners in excess of that $19.23 a week. Because it feels like that limitation was probably intended to be there, and it may come out at any given time. So another large area we talk about with eligible expenses is contractors, and payments to independent contractors has also taken on this $100,000 a year concept. So when we talk about contractor payments, we look at it in kind of 3 different buckets. So you could either be paying a contractor for goods, right? And if you're paying for goods, there's no limitation, right? So that's the 100,000 limitation is when you're paying for services. So goods are in their own category, unlimited as long as they're otherwise eligible and customary expenses in your business. Payments to contractors for services are limited to 100,000, but there's a caveat here. It's 100,000 per employee of the independent contractor. So an example of that is if you're paying an independent contractor that employs 6 individuals, you would be able to pay that independent contractor up to 600,000 over a 12-month period. And the third bucket, we won't talk about too much here. I don't think it affects as many of the members as it affects certain other entities in the industry, but would be royalties. So if you're paying somebody for intellectual property, we think that's kind of a whole separate bucket that should not be limited. But when you're paying for services, that's when the limitation kicks in. Other than that, we have artist fees, right, is a big one. And we do believe, based on the guidance out there, that artist fees are subject to the same limitation, the $1,923 per week. When we look at other costs, right, that, utilities and insurance and things like that, we just want to talk about kind of breaking it out, right? It's that whole concept of incurred, paid versus incurred. If you're paying, a lump sum at the end of the year that's going to cover the next 3 months, right? You can only take the portion that's going to be through the end of December for those expenses for grant purposes. Just wrapping up the expense section, debt, right? Scheduled debt payments are allowed, principal and interest, if it was a scheduled debt that was in effect on February 15th of 2020. You cannot prepay debt, but you can pay the scheduled payments with the grant. Advertising, the stipulation is just that it cannot be the majority of the grant funding, right? So we basically read that to be, it must be under 50% of your grant expenses should be for advertising. And then of course, ineligible costs are the purchase of real estate, right? Making investments, reloaning the funds, political lobbying contributions are of course excluded. And then there are certain things that we'll get to just under general OMB audit guidelines that we think will be excluded, which we will touch on in a little bit. So at this point, I'd like to kick it over to Lara.
Yeah, so I kind of wanted to expand on what Scott mentioned of this concept of expenses incurred versus spent. So for SVOG, you can apply it towards eligible expenses that are incurred between March 1st, 2020 through December 31st, 2021, not including supplemental. But remember that this is incurred. So it's the period that the goods were received, the services were received. It's the period that the expenses actually relate versus when you're actually paying for those expenses. So for example, if you made a payment for an eligible expense on March 1st, 2020, there was actually an expense for January of 2020, it would not be eligible, right? Because you paid the funds, but you didn't incur the expense during that allowable time frame. Going the other way, if you have an expense that you've incurred in December of 2021 that's allowable, that you have not paid as of 12/31/21, it could still be included for the SVOG purposes. It can still be payable on your books as long as it was an allowable expense that was incurred during that allowable time frame. So just make sure that you're really keeping that in mind, because there is sometimes a difference in timing when the expenses relate and when you're actually paying for those expenses. And SVOG is very clear that this is incurred, not paid. Also, something to look at too is making sure that these are actual expenses. I'm not sure like how many people on this call use estimated accruals, or they have estimated expenses that they kind of book throughout the year and then they actualize them. But for purposes of SVOG, these have to be actual specific expenses that you have supporting documentation for. So for example, if you kind of book an estimated accounting fee throughout the year until you get all of those invoices, the amount that you can actually submit to SVOG would be the actual expense that ties directly into the invoice. So for any expenses that might be estimates on your books, you'll need to make sure that those get actualized before you submit your final report. A couple other things to specifically kind of touch on is insurance, for example. A lot of people on here probably have various insurance policies that cover different timeframes, workers' comp policies that are based on salaries. So for anything that covers like a time period, you have to make sure that the portion that you're including in your SVOG is an allowable expense that falls during that period. And if it's something like workers' comp where that policy gets audited, so for example, you make payments on these policies, but then at the end of the year, they actually audit them based on the salaries. You want to make sure that you get those audited numbers and those actual amounts, and that's what you're submitting, because you can't submit anything to the SBA for SVOG that you could get refunded or reimbursed for. It's kind of that whole concept of the double dipping, where you can't receive more than $1 of funding and then for $1 of expense. So kind of across the board. So anything that you're getting reimbursed or refunded for, whether that's from another federal program, whether that's from an insurance, business interruption insurance, or just something that might be actualized, you have to make sure that you kind of get those final numbers before you submit them under SVOG, and that you're not double dipping across any programs. Another thing too to keep in mind is that you could have certain expenses on your books that You might amortize, for example, if you have sets or if you have costumes or things like that, that you amortize kind of across a period of time. As long as you've kind of taken title to those goods as of 12/31/21, those would be fully eligible under SVOG. Another big one too that we see a lot is advertising. So as it was mentioned, that advertising is allowable under SVOG, but it can't be, you can't use the majority of SVOG for advertising. But advertising, a lot of times you go into big advertising campaigns where they might cover a period of time. Just keep in mind that advertising is generally allowable or incurred when it's on view to the public. And if you're prepaying any of those advertising expenses, just make sure the portion that you're submitting to SBA for SVOG is actually falling in that time period.
Well, I think that's a really good point there, mentioning prepayments as well. We get a lot of questions. Can I prepay? You know, if I get towards the end and I have a lot of funds left, can I prepay for things in January and February 22? Let's just say, assuming there's no supplemental. What would we normally recommend for that?
I'm sorry, can you say that one more time?
So we would, if someone's saying that I want to prepay in December for things in January and February of 22, assuming there's no supplemental.
Yeah, so assuming there's no supplemental, you can't include any prepayments for purposes of SVOG. So again, you have to make sure that the expenses actually relate to that time period. So prepayments would not be allowable, not including the supplemental. That's obviously a different bucket that will kind of cross if you do get that extension. But it's definitely really important to look at those cutoff periods at the March 1st cutoff, as well as the 12/31/21 cutoff, just to make sure that you're really including expenses that are incurred during that period. Because across the board, they're really going to look at the eligible expenses that A, they're for allowable use, and B, that they fall in that allowable time period. And also, just to keep in mind too, with the way you keep your books, you know, sometimes things come in where you might not actually be accruing in the correct period. So that's also something to look at, that when you're actually booking these expenses, that they're falling in the correct periods. So for purposes of kind of what you're going to need to keep for these expenses. So obviously, I'm sure you guys have read some guidance just and maybe familiar with audits of different federal programs in the past, but you will have to have supporting documentation for 100% of these expenses. So one thing kind of first is the record keeping. So the SBA is pretty clear that they want to be able to tie expenses charged to this federal program directly to your books and records. So this means the actual accounting softwares that you're using, you're going to need to go in and classify items and code them however is best so that you're able to run direct reports from your systems. And as Alex mentioned earlier too, also making sure you're transferring cash in actual dollar amounts and not just kind of estimated transfers, because they will be looking for reports directly from your software. And then also, you know, keeping some external schedules as well to ensure that you're not double dipping across programs, as Scott mentioned. It's really important that you kind of have all of this tracked, because we're not sure how, you know, how much they're going to look into this for purposes of submitting your final report. You guys will have certain audit requirements that your auditors, as well as the SBA, could look into even more detail. So it's better to just start it like from the start, just really tracking all of these expenses in your system and having any supplemental schedules that you need to support. And then for purposes of actual backup, so every expense will need backup. So that's executed contracts, that's invoices, that's, you know, agreements with artists and other venues, things like that. So you're going to have supporting documentation for every dollar of expense, essentially. So tying back to your reports as well as the supporting backup. And kind of what the SBA is saying is, again, they're going to be looking for two things. One is that the expense is an allowable cost, and two, that it's incurred during this allowable period. So you're going to submit all of this with your final report electronically, but you also have to maintain it for backup for 3 years and any payroll employment information for 4 years. So just make sure that after you do submit your final report, you're also kind of keeping all of this organized so that if they do come back, you know, they have this couple-year period to come back and request anything additional. So for audit considerations, if you're a for-profit entity and you expend more than $750,000 in a single year, then you're required to have either a single audit or just a GAAP audit, audited financial statements. So if you already are audited, you would already meet that requirement. If not, you'll have to look into a single audit. If you only receive funds from one federal program, it most likely will be a program-specific audit. For not-for-profit entities, you actually have the requirement to do both the single audit and have your GAAP financial statements. So it's just something to keep in mind as you kind of go through this whole process, that not only will you be submitting all of this stuff to the SBA as part of your final report, but you'll also be audited by external auditors. So it's important for any backup that you're also making sure internal controls are in place, just like you would in any audit, making sure that those invoices are authorized to be paid by an authorized member of the organization, maintaining that you have all of the backup is signed, kind of things like that. And just keeping in mind that this $750,000 requirement is for all federal financial assistance, but not including PPP. So you have to combine all the federal assistance that you've received in that year to see if you're over the threshold, but you don't have to include PPP. And then one other thing, just in regards to the single audits, so if that applies to for-profits as well as not-for-profits, is that we're kind of still waiting on some guidance. They just came out with a compliance supplement, but the American Rescue Plan grants were not included. So there's supposed to be an addendum that comes out in December, where hopefully they'll provide specific guidance related to the SVOG grants. And then lastly, kind of what I wanted to touch on is just the supplemental phase update, because obviously now that everyone is starting to receive their first phase, they're looking to that supplemental phase as well. So just the requirements in general for a supplemental award is that you meet the decline in earned revenue from Q1 2021 compared to Q1 2019. And that is the 70% decline, so that you have no more than 30% earned revenue in 21 compared to 2019. So a lot of our clients have been receiving notice of action items requesting that they input their Q1 and Q2 2021 numbers if you have updated or you maybe didn't submit them originally. So our advice is to do that action item, get that information submitted. It does seem like this is triggering kind of supplemental being in review. We are still waiting on some guidance to come out kind of on the next steps to apply for the supplemental award. But if you get that action item, definitely, do that as soon as possible to meet the deadline for that, because it does look like this is kind of starting that process for the supplemental.
I think it's really important to mention why the supplemental is so important is that for those who are eligible, not only do you get the additional 50% of your original grant amount, and that's before PPP. If you had reduction of PPP in your initial grant, the supplemental will be calculated based on your grant amount before PPP, but also the extension to 6/30/21 for allowable expenses. That is for your initial phase grant and your supplemental grant. So what we've been recommending is making sure you fill out the information for the supplemental, so then it kind of gives you more time to analyze how to use these expenses and make sure you have enough expenses to use, to maximize the amount of benefit for your company or organization.
Yeah, absolutely. And you just like having additional 6 months, even if you're not going to be getting a significant amount of more money or something like that, still just gives you more time to kind of find these allowable expenses, and also kind of helps because, one recommendation is always, if you have a variety of expenses that are eligible, start with the ones that are pretty easy to provide backup for, easy to isolate. There's no questions on, no gray areas, because that's a great place to start. And then you can start going into like payroll and things that are a little bit more complex because you have to look at it across various programs. So having an additional 6 months to kind of apply to other expenses, whether that's your first phase or your supplemental phase, would be a benefit to anyone, even if you think that you could use those easily by 12/31/21. So definitely something to consider. Just getting those numbers input, regardless of whether you're going to be applying for the supplemental or you think that you've already got the $10 million. I mean, our recommendation is still at this point to go ahead and get those numbers in, because they could be extending the supplemental. Even if you have the 10 million, you wouldn't be receiving any additional funds, but you could still get that extension. We're obviously waiting on final word from the SBA on that. But again, at this time, our recommendation is to get those 2021 updated numbers in so that you're being considered for that supplemental.
Got any closing remarks before we open up to the Q&A?
Yeah, thank you, Lara. I just wanted to touch briefly on that concept of the supplemental grants, right? And so this isn't official or by any means, right? But there's been lobbying efforts by the Broadway League to kind of get the $0 grant concept back, right? So there was this concept put into the FAQs that if you got the full 10 million, you could request a $0 supplemental grant. It wouldn't give you any money, but it would give you the extension, right, to June 30th of 2022. We just this week heard from the Broadway League that they are expecting this to be a reality soon, right? So kind of the next FAQ update, we want to be looking for that. But as Lara said, that's why we're just saying across the board, you should, if they reach out to you regarding Q1, Q2 revenues of 2021, you should comply if this time will be beneficial to you. Because as one of the commenters mentioned, right, that there may be a blanket extension by Congress, but that's very unknown, right, at this point. It depends on a lot of things. So while we would all love that, this $0 supplemental may be the answer that they're going to give, right? That you have to do the $0 supplemental grant to get the extension. That said, Lara, can you just touch very briefly on the $750,000 audit requirement? There was just a question about that as far as it pertains to receiving the funds or, expending the funds in a certain.
Yes, so it's the $750,000 expending in one fiscal year. So that would be the requirement. And again, if you are a not-for-profit, you would have the GAAP audit as well as the single audit. That's a requirement for not-for-profits that you have both.
And one thing that's important to note, there has been recent guidance, and unfortunately, because of how the grant letters released, it crossed over the year end of 6/30 year ends. So if you are a 6/30 year end and you receive your grant letter prior to 6/30, and you plan on expending more than $750,000 worth of funds going back to 3/1/20, it'll be expected to be included on your 2021 CFA. Or if you're a for-profit entity with a 6/30 year end, your audit requirement would start at 6/31. Whereas if you received it after 6/30/21, so say you received it 7/2, your clock would not start for the 750,000 until 2022. So it was just a weird timing thing that we ran into. Same thing there, kind of also, it's a good point, segue on revenue recognition. If you received your grant after, if you're 6/30 year end and you received your grant after 6/30, you're not able to record a receivable on your FY21 financial statement up to the amount of expenses you would have incurred. The clock does not start until the date of the award letter.
Yeah, it's just important to keep in mind that the date you got that notice of award, you can't record revenue before that date. So even if you're applying it to expenses in your fiscal year 21 audit, if you're a 6/30 client, that's absolutely fine. But if you received the award after 6/30, you wouldn't be picking up the revenue as well. So there would just be a timing of when the expenses and the revenue are recorded, because that letter came in right after your year end if you're a 6/30.
Okay, so I just wanted to mention two FAQ updates, and then we're going to open it up. So the one big one, and I apologize if this was mentioned, but the requirement to request a modification, a budget modification. So that was removed. So if you move funds around within the cost categories, that's okay. You just have to submit the final budget, right, which shows how you spent the money. And that there was an appeal process for declined applications, and there's a reconsideration process. If you applied for 2 million and you got 1.5, there's a reconsideration process to go back and see why that happened. So with that, would like to open it up to questions.
Thank you so much to the whole team from Withum, Alex, Scott, and Lara. lots of things to think about for sure. And we're appreciative you helping to guide our members through this. If anyone does have a question and they would like to raise their hand in the chat functionality to ask that question directly, you're welcome to do so. We can also start heading to the chat for any that have been placed there as well. We can start with one here in the chat from Jen asking about the audit requirement for both fiscal year 20 and fiscal year 21.
Yeah, so I did quickly just put that in, but I'll say it over here. So all of your 2020 eligible expenses, so from 3/1 to 12/31/20, they would be included on your 2021 or 2022 CFA, again, depending on the timing of when you received your letter. So if you received your letter, if you're 6/30, you received your letter prior to 6/30, it would be on your 2021. If you received it after 2022. If you are a 12/31 year end, everything from it will all be included on your December 31st, 2021 year end requirement.
Okay, there was a question about alternate supplemental funding. So basically, the supplemental funding is you compare your Q1 19 to your Q1 21 revenues. If you were not in business in Q1 19, then the guidance is to compare the first quarter that you were in business to Q1 21. Alex and Lara, that's correct. Q1 21, right? Not Q1.
And also something to keep in mind, if you're a seasonally operated entity, there's alternative method for the supplemental as well. So if that applies to anyone, but essentially if you operate seasonally rather than year round, it kind of depends on how much you have to kind of look at a quarter to quarter to see how you operate. And then there's a different allowable time frame for purposes of calculating that eligibility, but it's detailed in the FAQs. There's like a pretty clear example. So I know there's a lot of questions, but if that does apply to you and you are seasonally operated, that's something to look at because you could maybe potentially be eligible for the supplemental as well.
It looks like we have a hand raised from Steve Littman.
Hello. Question for artist deposits that are for concerts that are outside of the SVOG period, but the deposit is required to be paid in the SVOG period. Is that expense, the deposit only, a qualified SVOG expense?
So yes, in the FAQs, they do state that deposits are includable if it's for the future, as it is ordinary and necessary. The caveat here is that it refers to artist fees as independent contractors. So because of that definition, and similar to how Scott mentioned earlier, at this time, our position is that these would also be subject to the 1923 limitation, this cap. So that is something to consider as well.
Yeah, the FAQ is worded very poorly, as some of them unfortunately are, and it refers to them, as Alex said, as independent contractor payments and as ordinary necessary expenses within the same paragraph. So, being conservative based on what we typically see with grants, that's why we're going in that direction.
So for clarification, you are saying that artists whose fees might be considerably more than the $1,923 a week or $100,000 in a calendar period, that those fees in excess of $100,000 are not payable by SVOG, is that right?
Well, that is right. I mean, we think that you should get certifications from the entities you're paying as to how many employees they have, which may help with part of that, right? If the artist says you're paying my corporation and that corporation has 6 employees, then that would up your limit. Short of that, we would look for, because I understand this is a huge issue, particularly in this industry, if you're paying somebody $200,000 for one performance, for example. So I think short of that, we would have to seek specific guidance. It would have to be a direct SBA inquiry. The hope would be that it could be brought under order necessary, but there's not enough out there right now to say it with certainty.
I'm curious because if the idea that they're independent contractors is legally vague. I mean, many artist contracts will say that we are the employer. Some will say that we're the producer. It's inconsistent and, nebulous.
Agreed.
Yeah, agreed. And we say independent contractors, not necessarily under the terms of a 1099, but a contractor is somebody who provides services. So in any instance, the contract is written that it's for their intellectual property, the payments are for their intellectual property, those would not be limited to the 1923. It's in the case of, the classic one is you have somebody performing for, a certain amount of time. You're just paying them their performance fees. That's kind of the idea there.
And I would recommend, I honestly think if that's a big enough issue, which I think it may be for certain applicants, I think that's an item that probably needs to be addressed and kind of lobbied with SBA directly. And that argument made that it's a ordinary necessary expense and kind of get an FAQ. I mean, that would be the best results, to get an FAQ out there that specifically addresses the issue better than the one that's there. So.
Thank you for that. We've got another hand up from Brian Drusky.
Sorry, I had my mute on. So I just had a question. As we're doing these, everything, when we submit everything, do we have to submit the backup at the same time, or we just wait to get audited and have everything there? Or because if you're a large number you're going to reconcile, I mean, that could be a lot of backup. I mean, I'm just curious.
So,
Absolutely.
Yeah, no, absolutely. Our understanding right now, and I think as the time period kind of, comes to a close for the allowable use of the funds, there will be additional guidance on submitting these final reports and what needs to be included. But our understanding right now is that you will need to provide the backup into the portal with your final report for 100% of these expenses. Obviously, when you went through the application process, putting in attachments was probably very difficult. So the thought of doing this for, potentially millions of dollars does seem, could be very challenging. So we'll wait for additional guidance, but typically, and our understanding now is that you will be providing the backup along with that final report for the use of those funds.
So then if you have, so realistically, then you need, and I know you don't know this, you're just spitballing too, but so you're gonna have to submit every invoice for every, like, say, so if you have a show, you know what I'm saying? So
Yeah.
if you have a band, you for on this date and sound and lights and stagehands, you're gonna have to submit every single invoice for every single
Every
thing.
penny of expense.
Yeah,
They're looking for every penny is what they've said.
Yeah, and they also even said that, like, sometimes, because it could be a breakdown, like the expense could be a breakdown of a larger contract, that you might, the contract might not even be sufficient. You might also have to provide additional backup to how you're getting to that expense from the contract. Or in other words, if you, you get settlements and the settlement summarizes a variety of costs, the settlement itself wouldn't necessarily be sufficient. You'd also have to have the backup to support those costs on that settlement as well. So there could potentially be a lot of these expenses that you're not just uploading one item for, such as an invoice, that you do have to even take it a step farther to kind of provide that additional backup as well.
Yeah, payroll is another one that we're suggesting that, you're going to look at you're going to provide a payroll report, but if the payroll report again is, if somebody's payroll over the 1923 cap, you're going to have backup support on how you got to the 1923. So yes, I agree with you. It is a large ask, and we are hoping that there is more guidance and is more friendly guidance. But at this time, we are under the impression, and from what everything that's been said, is 100%.
Okay, thank you.
Thanks, Brian. I just want to check in real quick with the team from Withum if we have time for a few more.
Yeah.
Yeah, I will have to jump in a minute or two, but yes, but go ahead.
Okay, great. We have another question coming in from Pam Sheridan.
Hi there. Can you hear me?
Yes.
Yes.
Hi, yeah, we did hundreds of thousands of dollars in refunds in 2020, but they weren't necessarily tied to a specific show when we did the refund. How do we show that as an eligible expense?
That's a great question. So is this for example, like a membership or they buy a group of tickets? I think that's just where I'm a little.
It's just it's a comedy club, so we canceled tons of shows.
Right. If you are running through a box office system, you usually can run reports of any refund given. And as long as the and the FAQ states that refunds for any ticket, any ticket refunds for cancellation of shows are allowable expenses. So if I would include those are includable as ordinary. I believe it was considered under ordinary and necessary in the FAQ. As far as exactly how to show that, it kind of depends on the system you use, but a lot of ticketing systems allow you to run just refund reports, and I would go with that for the eligible period.
Yeah, and also maybe just providing backup to show that, the shows from this period were all canceled. To kind of add in and stuff. If it doesn't break it out in those reports by, date or show, I would just kind of attach backup to show that, I know it kind of affects everybody that it was all canceled during this period, but just showing that you were closed and had to cancel during that time frame.
Okay, great. Thanks a lot.
Alex, can I ask a follow-up to that? Yes, Alex?
Yeah.
So usually there's a third party that has, if you're using a ticketing company, that has the ticket revenue. If that ticket revenue was never transferred to you with respect to these refunds, are you guys saying that you can still claim this against the grant?
You were entitled to the revenue. It just didn't actually transfer over to you. Is that correct?
Correct, because the shows never happened.
Yeah. So I guess the question here is, who holds the liability on on those funds until the show happens? For example, from my understanding, and we see this in the theater a lot, is that for commercial Broadway, is the theater holds the liability of the ticket sales until the date of the performance, and then it moves over to the entity. If Ticketmaster is holding the liability, meaning that if someone was going to go for a refund, that it would come out of that kind of that bank that Ticketmaster is holding for you, they're holding the liability. I really don't see how you could include it. If Ticketmaster is just a holding entity, that they're your funds, they're rightfully yours, and it's just a matter of when the timing is, I can see those being includable. Does that make sense?
Not really, to be honest, because obviously Ticketmaster is holding the money until the show happens.
Right, but when the show doesn't happen, it's not affecting, like, for example, you didn't receive the cash and then have to pay the cash back out, correct?
Right.
But then in that case, that's kind of what I'm referring to here. You never had a cash flow impact because you had to return the tickets. Kind of how I'm
So in that instance, are you saying you can't apply that against the grant?
I wouldn't think in that instance that you could, right? Because if the show if it never happens at all, you're not going to receive anything, and you didn't get it and have to pay it back out. So I would think in that instance that it would not be applicable against a grant.
Yeah, I agree, but when that prior question was asked, it seemed to imply maybe something different.
Yeah, no, I think it was in the case where when these artist deposits or advances or tickets had to be physically refunded, so the cash came into the entity and then had to flow back out, then they were considering, there was an FAQ that considered that an eligible expense.
Correct, I saw that.
Yeah.
Should we pick one or two more?
Sure, we've got two more if you've got time. Randy Henner, please.
Yes, thank you. So I had a question. If you're in an open venue, being a venue that's not yours, go in and rent. Typically, when you settle, they will take all the expenses out of your ticket revenue before you pay them. So that would include security and stagehands and ushers. Do I need to pay each one of those separately myself, or am I going to hit a number over 100,000? Because, like, how am I showing it? Because it's never showing necessarily as a payout. It's just a deduction from the money that they owe me from the box office revenue.
I'm sorry, I think it kind of went out a little bit. I was having a little hard time hearing, but for purposes of that, so these are actual expenses that you're incurring, but they're withholding on their settlement, and then they're paying you a net amount at the end of the performance or the performance week, correct?
Correct.
Yeah, so these, that's kind of what I mentioned in regards to, having the backup for not just the settlement, but for the actual support for the cost on that settlement. So as long as they're eligible expenses and they're on that settlement, they could be reimbursed to you under SVOG. For payroll items, you have to also look at the $100,000 cap, and you have to make sure that you're kind of tracking these so that you're not going over that $19.23 per week cap. If you're going to use the salaries on the settlements, no different than any compensation that you're paying just directly. Does that answer the question?
Yes, say the rent for the venue, which would be what would fall in the $100,000 cap, is $75,000. But then you have stagehands are $50,000, and your security in front of house staff is another $20,000. So whatever that came to, whatever, $150,000. Am I allowed to show those as three separate, even though it was all paid by the venue? Am I allowed to show it as three separate expenses?
Yeah, so those expenses would be looked at separately, just like any other expenses based on like what they actually are. So for example, if you're paying for one usher and one security personnel, those are different employees. So you're looking at the compensation separately. So you wouldn't combine them for purposes of $100,000 cap.
Okay, thank you.
Awesome. We'll do one final question, and that can be from Susan Goes.
Hi, I just have a quick question about depreciation. The SBA had previously identified that as an allowable expense, and I'm wondering, is our annual depreciation schedule that we prepare for our nonprofit tax return, is that adequate backup, or do I need to collect some other kind of backup for using this for depreciation?
So that's a great question, and they were the newest FAQs made it even more vague. The newest FAQ simply just says depreciation is allowed, while the old one referred to CFR, referred to the OMB requirements. So you could always, if you search depreciation to CFR, you can get more of the general guidelines. But basically, yes, depreciation is allowed, but there are certain rules on you need to be consistent year to year. You need to be you need to have the support to basically say why you've chosen the estimated life. So yes, your normal depreciation will, from either your audit or your tax return, will be allowable under what we understand from the current FAQs. What I would recommend is that you have a fixed asset schedule that shows kind of, even comparatively year to year, that you are doing your depreciation consistent. You do have a policy around the capitalization of assets, that you kind of are doing the little things around fixed assets. You're not just aimlessly saying, everything I own divided by 10 is my depreciation, if that makes sense.
Yep.
Yeah, I think it's definitely clear to show that like the estimated life that you're using for that depreciation is reasonable. And again, that it ties into any capitalization policies or fixed asset policies that you have, which if you're audited would also be detailed in the notes of your financials typically. So it's a good question. Of the amount of backup that will be needed, I think the clear starting point would be the clear schedule that shows your total assets, the depreciation expense for the period, getting to that net amount at the end. And then also just making sure it details any terms for that depreciation.
Super. Thank you very much.
Thank you so much, Lara, Alex, Scott. We so appreciate your time and all the knowledge, helping us all sort of navigate these waters as tricky as they've been. Please be sure to check out Withum's website at www.withum.com. That's WITHUM. And again, thanks to all our NEVA members for joining us today. This has been recorded, so we'll be able to distribute it if there's anything that you feel like you missed or anyone that wasn't able to join. And again, we thank you so much and hope you have a great rest of your day.
Thank you, everybody, and we hope we did provide some value today and answered some questions. We did receive the listing of the other questions. If there are any we feel we did miss, I will respond to those, and they can be distributed through NEVA. Thank you.
Thank you.